I'm Charlotte McLeod with the Investing News Network, and here today with me is Jeb Handwerger. He's a junior mining investor and he runs the website Gold Stock Trades. You can also find him on Twitter at Gold Stock Trades. Thank you so much for being here online with me today.
Thank you, Charlotte. I've enjoyed watching your interviews over many years now at Investing Net News Network, at least 5 years. Am I correct?
Yes, I've been here since 2012, but only doing the interviews for probably about 5 years, so a long time. And thank you so much for being here to talk with me today.
Thank you for having me. It's a pleasure.
All right, and let's jump into our questions. I want to start with a fairly broad question about the year. It's almost the end of 2020, finally. How has the year been for you as a newsletter writer? What trends have you noticed among your followers? What challenges or opportunities have you seen?
Well, 2020 is going to go down in the history books for all of us and investors, especially junior mining investors. We saw the beginning at the end of last year, really began at the end of last year. And even before this coronavirus crisis and people became aware of this, we began to see the Fed starting to lower interest rates at the end of 2019. Remember, at the end of 2019, there was some concerns on the repo rates and the Fed controlling interest rates, and there was already signs of the economy under pressure, and that's when the money printing started, even before we heard cases arising in China in early January. And if you've been following me on Twitter, we were aware of cases rising, and then we saw as it began to spread to America and the lockdown crash, where we adopted, a lot of investors weren't sure, will the US adopt draconian measures like the Chinese? Could it be done in a country in the West where you have constitutional provisions such as freedom of religion, freedom of assembly? Could you really even lock down and put people into lockdown and solitary confinement? Well, we saw what has happened. They did do a lockdown, a pretty severe lockdown globally. The stocks crashed, the commodities crashed, everything pretty much crashed into deflationary scenario. We had skyrocketing unemployment, everything had to be shut down. Business came to a halt. And we saw, the lockdowns create this sort of panic. And at that time, we saw the Federal Reserve and banks worldwide unleash the most spending and dollar printing. I mean, over the past year, I've heard almost 25% of the dollars in circulation have been printed since this coronavirus crisis. So that is major inflation. At the time, we saw copper go down to $2. And if you follow me on Twitter, this was an excellent opportunity. Some may be saying that, the Chinese, and when we've seen the commodity market, such as copper, go reverse from $2 to 350, and we've seen the Chinese economy, where the virus originated, the Chinese economy has been booming. So when there was this crisis, some are saying that the Chinese really bought up a lot of the raw materials during that crash. And again, we've seen the crash, worldwide money printing, unprecedented record stimulus, and it's continuing. It's going to be even bigger next year under the Democrats that are trying to take control now. So they've promised much more, and this is just for junior miners. This is what investors have been looking for years, and what we've been preparing for. So as much as the stock market, it's still very high, but junior miners have been preparing, and gold investors have been preparing for a scenario just like this, and where you see the government's only move is to continue to print and stimulate the economy. And that's going to continue to happen at a record pace in 2021. We saw that first breakout move this summer in gold, where we ran to 2,000, and now the past 4 months, we've been in sort of a consolidation and digesting those moves, but we expect in 2021 to see another leg higher that could even be more powerful than what we saw this past summer. And that really this past summer was just really the beginning, the early innings of a multi-year bull market and a major rally that's going to happen because the gold discovery rate, there have not been major gold discoveries in the past 10, 15 years. So not only do we see this massive monetary printing, but we're also seeing just a lack of really good discoveries and the next mines for the mining companies. And they're making money hand over fist now. Like Barrick came out with numbers, they're making almost like $1,000 an ounce, and when you're producing, 500,000 ounces for some of these companies a year, those margins are huge, and but there's still not been the M&A mania, which is usually towards a peak for the mining sector. So we're still very early innings, and we're expecting after this tax loss selling period in December, another rally in the first part of 2021.
Okay, I think that gives us a great look at what has been going on, what's happened over the course of this year. How has your portfolio changed over the course of the year? What adjustments have you made? You mentioned this is something we've been preparing for. So what actions have you taken there?
Well, for me, for the past 20 years, I've been focused on the mining sector because uh, when I was graduating high school and deciding on careers to go into at the time, there was a huge dot-com bubble, sort of like what we're seeing today with this huge tech bubble. This is even bigger than that 1999 bubble. When you take a look at earnings, we're at even a higher overvaluation, if you can believe it or not, than 1999. But this is looking very similar to that tech bubble, and you know that uh, that's why we're kind of becoming very cautious. We've been cautious away from these overvalued. Like I mentioned, we're seeing companies going public now, like DoorDash, Delivery. When I was a kid, there was Domino's. We used to order Domino's pizza. So now they have DoorDash, and it's 60 valued at 60 billion. They have Airbnb, which is pretty much they don't own anything. People put their listing. And they're being valued. They went public at $60 a share. What's that now? $130 a share. Tesla, it's all in government support. They're playing, Bezos and and Musk are playing around with rockets while people are starving in the food lines, or around the block. There's a huge dichotomy in the economy where you have this huge stock market and Bezos and Tesla, and making a fortune, and the average middle class, the small businesses are going bankrupt at a record rate, and unemployment is soaring. So it's we've always been focused on the metals, but what we did when gold and silver went really high in July and went way above the 200-day moving average, we decided to move to polymetallic and copper and base metals, which was underperforming at the time and did not have that move. Now that's getting to catch up. Copper is making a big move, and some of the copper stocks have made a move, and gold has come down. So it's really important to look at that gold copper ratio. And sometimes if you're looking to trade, we stick in the metals, but sometimes we go more gold focused. Like right now, we might be looking more gold. But this summer, when gold was way high, we began to look at copper and uranium and lithium, and other metals, that were still very cheap and not way overbought, way above the moving averages, but still in basis, which we like to buy, and to try to avoid buying when it's way above the moving averages, which we encourage to our subscribers back in the summer, so that way when you have to go through a 4 month correction like this to the 50-day moving average, or like this severe in the gold market where we've gone down to the 200-day moving average, it's very painful. And, you have to suffer with a 20% drawdown, which is not easy. That's why you have to be careful as an investor not to buy it when it's too overbought, where RSI is way too high. Look when it's in a base. So that's how we kind of adjusted, going from gold to silver to copper. And now what's really broken out recently is platinum. Platinum was in a long downtrend and never moved. And people were saying, what's going on with platinum? Well, platinum now is finally broken out, and palladium's finally broken out. So that's where, as an investor, if you're sticking to hard assets, you got to look within the hard assets, which metals are moving, and energy is beginning to move, oils, so you have to look at within the hard assets in the commodity complex, there's ways of trading within that.
Right. And so once you've identified what commodities you're interested in, what are the characteristics that you're looking for when you're choosing a stock?
Well, it really depends on your portfolio. Everyone is different. Everyone has a different risk appetite. Um, the ways to really make money in the gold sector is when companies are making a new discovery, when they're drilling. That's where you can make, or for instance with Free Gold Ventures, they came out with one drill hole that kind of changed the thinking of the market, and the stock went from pennies, 8 cents, to went as high as $1.90. You're not going to get that with a developer or producer. You're not going to get those sort of 3,000% gains, or 10 baggers or 20 baggers that you're going to get with the discovery. But you have to understand that those projects, the development projects, already have a resource. They already have, there's a lot less risk. So I mix it up. I find the emerging producers, companies that are going into the production stage, where they're about to make a production decision, because that's where you can make a triple or quadruple. You might not hit a 10 bagger or 20 bagger in the discovery, but you could possibly hit a 3 bagger or a 4 bagger, like you saw with Pure Gold this past year, or Minera Alamos this past year, where they're going from making that decision to go into construction. That's a very lucrative part of the cycle. So I look for that area, who could be the next producers in the US. But I also look who's going to make the next big high grade discovery. And we were blessed this past year to find the number one performing top high grade discovery. We were also able to find the top companies that are coming into production, which have led in performance for our subscribers.
All right. And this is a little bit of a broad question, but as we head into 2021, what trends do you anticipate seeing in the junior space? I think this past year we've heard a lot about companies have been able to raise money when before they couldn't. You were talking a little bit about M&A. We haven't really seen that get going. What do you see for trends in the junior space going forward?
Well, the trend hopefully will be that the majors and the mid tiers will begin paying premiums and taking out some of these juniors. That has not happened yet. And that's what we've been waiting for. And that's inevitable, because eventually their shareholders are going to want to look for growth, because their production profile is about to fall off a cliff in a major way for some of these companies. And, the juniors in this market, there's been very little money coming back into the junior market, really led by a few people like Eric Sprott. But we began to see Warren Buffett come in. He bought a big gold miner. Eventually, there's going to be other value investors. And I'm seeing it, with my Twitter following and through online. There's a whole bunch of funds and extremely successful real estate investors, that, they're dealing now with huge portfolios of underperforming real estate assets that, they don't know if they're going to be getting rents. There's a rent ban now, so real estate as an asset class has been very struggling. and they're looking now to diversify. I think that the best way, if they can, and if they're smart, is go to the junior minors. But not everyone can do that. Warren Buffett can't really invest in the junior minors. He has to invest in a company like Barrick because it's big and it's liquid. And even then, he has to buy a small part of Barrick. You have to understand, Barrick, these gold companies are not valued. They don't, so if once the institutions start coming into this sector, it's like water going through, it's like a dam of water going through a straw. It's just too, it's like a river going through a straw. It's not, it'll break. And then eventually, the majors will be in, when they start buying these companies, they're going to have a lot more competition than now. So that's why they're sort of taking under companies, I would say, rather than taking over companies, or taking under companies, and they're JVing these projects because they're in a market yet where investors have not really started paying the premiums. We're still in the early innings. I think this cycle, it's a 40-year cycle. The last time we had this was the late 70s, early 80s. I think we're in for a multi-year cycle here, and that's when you're going to start seeing the majors starting to pay major premiums towards the latter part of the cycle.
And for what do you think the catalyst would be for these larger players to start coming into this sector, like more Warren Buffetts and people like that? Would it be a higher gold price or something else?
Well, really, what I think he said, and what the value investors are, why they're coming in, is because they're seeing the bank stocks are under pressure, and they're getting negative rates. There's negative rates globally, and the U.S. I mean, the mortgage rates continue to drop. We don't know if they may start even, rates go negative. They're already zero. Maybe they're going to start going negative, and that's where we've never had this before, where guys, these value investors say, hey, we're in a market now that we've never seen before. And maybe I never invested in gold or junior miners my whole 40, 50-year career, but maybe my dad was right, who lived through the depression. Maybe the gold miners will come back into favor. Maybe they will be the best cash generating machines in this sort of economy that we're headed into, which is a sort of, even a greater depression in some ways than in the Great Depression. I mean, we never had, the World War II generation never would have stood up for what we're seeing right now with this loss of freedom and complete lockdowns and shutdowns and telling which business should be open and which business shouldn't be open. We never, I don't think they could have ever imagined this. And, schools being shut down, parents' lives, the whole society disrupted. Um, so this is in some ways even greater than that Great Depression. And if you look back to that Great Depression, it was the gold miners, it was the junior miners, it was the geologists and the mining engineers that were the all stars during that era, that were the movie stars, that were the movie producers, that were the celebrities. And I think we're beginning to enter a cycle now where once again the junior mining investors and the geologists and the mining engineers, we're already seeing people not watching sports as much as they used to. There's no fans. People are going online and they're following Twitter, and they're looking at gold again, and they're studying mining, and they're questioning their currency. How can you just print 25% of the currency and not have massive inflation? And how can you see a stock market at 30,000 and not say there's no inflation, or a real estate market like you're in Vancouver, I'm in Miami, but both places have bubbles, real estate bubbles. I mean, it's hard for people to afford to live in these places on a regular salary, on an honest salary, middle class salary. That's inflation, and we're seeing really, challenging inflation in some ways for young people. And I think a lot of young people are looking to gold. Um, they're looking to cryptos. Personally, that's not for me. I don't understand it. But that's what young people are looking at. How do I diversify? How do I protect myself against a dollar crash? like we saw with in Argentina or in Turkey this past year. It could happen here. The dollar's been breaking new lows each week. People don't realize that we're hitting new multi-year lows in the US dollar.
Okay, those are a lot of great points. I want to go back to the gold price just briefly. You've been speaking about it. What do you see the price potential as being as we head into 2021, and what factors do you think will take us there?
Well, long term, I believe that we will go to a 1-to-1 or 2-to-1 Dow to gold ratio. And that's why some people say, 10,000 Dow, 10,000 gold, 30,000 Dow, 30,000 gold. I don't know where that ratio is going to wind up. But from my technical charts, we saw a run from $250 in 1999 to almost $2,000 in 2011. We had a 10-year base from 1900 to about 1050, about and 50% correction, which is quite normal in a basing period. And now we're going to start the second powerful leg of that gold rally. So if we saw 200 to 2000, we could see another 10x move in the gold price. And how is that possible? Look at the debt level in the US. Look at the M1 money supply. So as soon as they start getting this velocity of money, start picking up again with negative rates, gold could take off uh, like wildfire. The price could go sky high here. So, but near term, my first target, technically, after this 4-month consolidation, I have about 2,500, 2,600, between 2,500 and 2,700 by the summer of 2021. I'm expecting.
Okay. And just because you mentioned Bitcoin, the cryptocurrencies, as the Bitcoin price has been rising lately, we've heard, I think, some concerns that that's eating into gold, taking people away from gold and into Bitcoin. Would you say that's true? Is that something that you're seeing in the communities that you're participating in?
I see it firsthand with the subscribers. I've had plenty of subscribers that canceled out over the summer and fall and said they're going into crypto or they're going into, mushrooms was another area that I heard. Some went into cannabis, but not as much. Mostly what I heard was crypto and mushrooms the past couple of months. Just as anecdotal evidence from, and I've seen that when these guys started moving, they were right. When they made those moves, the crypto price went higher and the correction in gold lasted longer. And the mushroom stocks also went higher. So there is a momentum element to this sector, to the junior mining, and a speculative capital rotates in and rotates out and trades in and out. So I do think that there was some, movement into crypto. Um, and back in 2017, there is competition for the junior miners, and it doesn't, those investors definitely improve the liquidity and the trading volumes of our junior miners, which can be at points like in the summer, during the summer doldrums or during tax loss selling, can become very illiquid. So yeah, I definitely have seen some of that. But I believe that as soon as gold and silver start moving again, they'll be coming back in droves.
Yeah, I think definitely there's that give and take between those sectors altogether. That about covers everything that I wanted to touch on, but I did want to ask if you have any final words or perhaps advice for investors heading into the new year.
Well, this is a really important time for investors. We've seen in 2020, record job losses. Your job is not going to provide you security. You have to start educating yourself about the markets. You can educate yourself about different niches in the market. My favorite part of the market is studying about natural resources and commodities and precious metals. And the way to learn about that is by learning about mining. Mining can be one area where you can generate generational wealth if you learn it and you study it. It requires a lot of effort, a lot of due diligence, sometimes a lot of losses before you start, understanding it. And it takes a lot of patience before you get a big win sometimes. And sometimes you get in and it's a great market, and you think that you're smart, and it'll always be like that, and it's not. Um, but mining is one area where if you want to get involved in the precious metals, or you see that there might be inflation, or that you see all this money printing, start learning about mining. Speak to geologists, mining engineers. Starts. There's everyone's going to have different opinions, but you have to start developing your own uh, method and strategies. And it's a great area if you like science and geometry and mathematics. And the opportunities here to create wealth and to be an entrepreneur, is just unbelievable, and no better time than now, because it's our sector that I believe is going to become back into favor. All the signs, elements are there: money printing, lack of discoveries. This is a 40-year cycle in the precious metals. So I really believe that, for young people, mining, might be an area for you to look to go into. Studying geology, I know that there's plenty of jobs. They're always looking. The assay labs are they're looking for good uh, workers, and there's plenty of job opportunities. And I know people are struggling now. Might be a good idea to start looking to, even if you don't have money yet, study the sector. That's what I did when I was started off. I started off with my summer money that I worked as a dock boy with $3,000 in 1998. Um, and I took that and I started going to conferences and speaking to CEOs and speaking to newsletter writers and reading them and questioning them. And it don't need a lot of money, but you need to be curious. And I think that if you're interested in precious metals, one way you can do it is just buy the bullion, buy the coins. Uh, but another way is studying the stocks and the mining stocks, and studying the companies that are drilling, that are good management, good assets, people that can finance the companies, that know how to finance without predatory financing, good promotion, good marketing. That's where you can make those outsized gains that can be truly life changing.
Okay, I think those are great words to end on. Thank you so much for taking the time to speak with me today. It was great to hear from you.
Thank you, Charlotte, for having me, and thank you to Investing News Network that for putting out so many great articles and content that highlights investing in the mining sector, in the junior mining sector. You provide a lot of great information and interviews and content for investors to really learn. The best way is listening to interviews, listening to investors. You get the best education by tuning into Investing News Network. All these MBAs, they cost, the tuition is a fortune, but you can listen to some of these successful guys that have built companies. Listen over and over and over again, because there's a lot of tidbits that you have to go to pay colleges thousands and thousands of dollars, that you could just log into Investing News Network, or and others on Twitter. And there's so much great information that's for free.
Well, thank you so much for those words. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Jeb Handwerger.